how to read the psychology of the markets. When is selling behavior going to end and buying going to begin? There is some ratios known as the golden mean, Fibonacci, which applies to the markets, especially to crypto. We are going to be able to measure in advance and see what's likely to occur. So if you like today's video, like, subscribe, hit the bell notification because I'm going to share my secrets with you. If you don't know me by now, my name is Jigay. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to focus only on currencies, but now exclusive on crypto. So let's dive straight in. All right, we've got some theory stuff we need to cover first. So Fibonacci, right? Coincidence of pattern and price. So we did a lot on Elliott Wave recently, right? So if you watch my last few videos on YouTube, take my masterclass, see I did a lot of Elliott Wave stuff. But today we're going to combine it with price action and Fibonacci in particular. So trend change is highly probable when a market trades into a pattern and price zone. So we're looking for something called a confluence of events, where two or three pieces of information are telling us the same thing. It makes it highly probable of what's going to occur next. That's what we're looking for. Purely technicals on this. So Fibonacci ratios is a series of ratios related to the root ratio 1.618, also called the golden mean or the divine proportion. Really, really important, really powerful. These are the most prevalent ratios found in all forms of natural growth processes, including the process of mass psychology. That is buying and selling behavior, my friends. Buying and selling behavior. So why should you use this? So we're going to understand the method behind the madness, why and how price goes up and down, different phases of the market, which drives different buying and selling behavior. We want to identify in advance, right? How annoying is it when you go, I wish I bought Solana when it was $26. Now that is $260. But we're going to be able to see where it has high potential to hit $260 before it hits that price target. Help your decision-making process so it's objective. High probability outcomes, what's likely to occur. So you can only do probabilities and never certainties. Trend, counter trend. Trend is your friend. Ride it until its end, until it reaches its bend. And you should expect new highs to occur. So W.D. Gann, one of my favorite guys, old school guy, 1800s, was one of the pioneers of technical analysis. Every market makes a top and bottom on some exact mathematical point in proportion to some previous move. So all these waves have relationships to each other. So we want to see, can we look at what's happening? So here's some examples, right? We did this with Dogecoin. This is one of my early videos back in April, May. Was it May? Yeah, we pegged the top, boom, using this, right? Bitcoin, we pegged the top April 19th using this and made this big correction. And we're still in that correction. This was another token that you're probably not even aware of, Zero Swap. You know, I took profits right at the top before this big correction. So we're going to use that. Right, so one of the ways that we're going to do this, and I'm going to show you some examples in a second. In fact, we're going to focus on wave 2 right now, right, is because we're going to look at Fibonacci ratios. The first one we're going to use is something called retracements. When you see a wave 1, which is basically a first move to the upside, and when it starts moving down, there's particular ratios, and there's a software called TradingView. You can also use DEX tools. We can use a Fibonacci retracement tool, which I'm going to show you in a second. We can click here, you click here. So there's a first click, second click, and put in the ratios. And what we're going to measure is the movement to the downside. There's 3 typical ratios for a wave 2. And this will make sense to you if you've done my last few videos. And if you're not familiar with Elliott Waves, Fibonacci, and you're new to this channel, take my free Elliott Wave and Fibonacci masterclass. It's in the link below. And we break down a lot of this in layman's terms, so you can kind of get a real edge on the market that other people just can't see. But the 3 ratios for a wave 2 is 50%, 78.6%, and there's a middle one, which I don't know if I've got here. It's going to be 62%, but we're going to cover it in the video, in the live data in a second. So typical price zones for a wave 2. Typical. Most powerful information that will have ahead of time. So we're going to predict wave 2s, wave 4s, corrections, ABCs, market moves up and down in this particular pattern. So what I want to do, I'm going to jump into Solana right now. That's the main thing right now. Solana, I used this example in my last few videos. But what we're going to use is exactly what we just saw, right? How, Jigay, did you project this in advance? I'm using this deliberately as the example because people kind of go, Jigay, yeah. Some people are even trying to, I see some of you were saying, going, did he film this and then kind of post it? Can he cheat the system, right? And I go, no, man, we just do Elliott Waves and Fibonacci's over here, right? High probabilities, but never certainties. So we did this video back on 14th of June, where we projected this price point, this wave 2. And there was a few key factors that I've covered with you in the last YouTube videos that we did. Go back and watch them because we covered some really, really pressing things that most people just don't understand. Is when we see this pattern, this wave A, what looks like a wave B, and then a wave C. One of the key ratios, not this, so we've got pattern over here, and we're looking at a wave 2. Right, so we covered this in the previous lessons. If you're not familiar with this, you can just take the free masterclass. It will get you up to speed. But the ratio that I want to show you, and the tool I want to show you, I'm going to show you over here. We're going to click this button over here. What we want is this fib retracement tool. You see it at the top? We're going to click on that. What we're going to do is we're going to take this low, but I'm going to do it from the side over here. In fact, let me show you like this. We're going to click down here. That's the first click, like I showed you in the theory. This is the second click, and it's going to show us some retracement numbers going down like this. So we can get it here like this, right? That's what we're going to look for. So now we're going to do this. We're going to get that fib tool, click down here, click up here. I like to move this click to the right. It just keeps the chart a bit cleaner, as it is easier to see, but make sure it's the correct numbers. Let's just get rid of these 3 now. And the minimum retracement zone from a price perspective is this first line here. You see this? This is 50%. The second one is 62%, or more accurately, 0.618. That's a key Fibonacci ratio. And a typical maximum is 78.6. And what we saw, it went right into this range. It also broke down into, I'm just going to add a bit more Elliott wave here, this 5-wave pattern. 1, 2, 3, 4, 5. So that's telling us 2 things. 5-wave structure of a wave C of a wave 2 in a retracement zone. That tells us it's highly probable. Now, by itself is not enough information, but in tomorrow's video, I think tomorrow, what I'm going to cover tomorrow, I'm going to cover some cool stuff with you tomorrow. I'm going to take Fibonacci retracements to the next level. There's some external retracements and extensions I want to cover with you, but today I just want to focus on retracements. This number was hit, and then literally what happened? This was one of the key pieces of information that I used to project this stuff that you're seeing here. And then what happened? Bang! Solana just exploded to a nice wave 3, right? And that's what we're talking about. Projecting this in advance. And you'll see me do this time and time again, but this is how I do it. I just use Elliott wave Fibonacci. Very, very simple, very clean, and just keep it consistent. Once you got it consistent, then you're just looking for these patterns. It's A, B, C, price zones. There's some other things we're going to cover, but today we're just going to keep it focused on retracements. And then this usually occurs next. And then you can maximize this. But we're also in future lessons we're going to look at or future videos, we're going to look at how can we pinpoint when is this likely to end, and then we can take profits, because most people are terrible at taking profits, right? There you go, bang. So there you have it. How to read the markets like a pro. Today, what we covered was Fibonacci retracements, especially wave 2s. The 3 typical most common ratios that you should be looking for is a pullback to 50% of wave 1. So wave 1 moved up, and then 50% pullback, 62%, or 78.6. They're the 3 most typical common wave 2 price zones. When you see it, even though the market feels like now's not a good time to buy because it's pessimistic, it's pessimism. The news and optimism is not there, and it doesn't feel natural to buy. But actually, wave 2s is one of the safest times to buy, especially if it's a strong project like Solana, or even some of these low caps that you see that are got their roadmap and they're launching version 1s of their project and they've done a pullback. You go, okay, do you know what? When everyone is selling, that's the time you should be buying, and then just be patient for 6 weeks, 3 months, 6 months, and you should do incredibly well. Probabilities, never certainties. What's the quote of today? Today's quote, I'm going to focus on chapter 2. It is Warren Buffett. Rule number 1, never lose money. Rule number 2, never forget rule number 1. You can increase the probabilities of not losing money by looking for these patterns and buying at optimum prices before the rocket shoots off, and at the lowest possible price point or in a price zone, as opposed to trying to chase the rocket, because people end up buying the top and then the price comes back and then you're in down 50% down for 1 month, 2 months, 3 months. You have to be very, very patient. Whereas if you just buy a bit sooner with a bit more skill, if you practice this stuff, you will be able to read the markets like a pro. So do take my free Elliott Wave and Fibonacci masterclass. I built it for you. Simplified a lot of this stuff. So it's in the link. Let me know how you find it, and I'll see you soon. So tomorrow's video, I think I'm going to cover a bit more of the advanced Fibonacci extensions, a few more factors around what you should be aware of, the ratios, the key human psychology ratios of price movements, and we can project it in advance. Have a good day. I'll see you soon.